So, hi everybody, this is Hustle Hub. I'm Giacomo. Today I'm again with Eric Gruvenhoff. He's a contributor on Seeking Alpha, and he has done some research. He published a few articles in the last few weeks. So we'll go into, today we'll go into F45. So Eric, please introduce yourself for those who don't know you yet, and then we'll jump into the video.
Sure. Hello, my name is Eric. I write for Seeking Alpha. I've read around 10 or 11 or 12 articles now. And I was looking for a company to bet against, to go short, or to bet that the price was going to go down. Typically, to look at companies that are overvalued, or companies that people think that they have a good business model when they really don't. So I did F45, and F45 is a gym that does group activities. And with gyms, most common types of gyms are gyms like Planet Fitness. Planet Fitness is a type of gym where you pay your monthly fee, then you go in and you use the machines, and then they can upsell you a personal trainer. Maybe they could upsell you a tanning bed, or maybe they have group classes that are for free or included. So F45 is a different type of gym. So F45 is a group gym. So group classes, group yoga, group spinning, things like that, only that type of gym. So for example, Planet Fitness, the typical membership is $10 a month, whereas F45, the typical membership is $200 a month. So the reason that I wanted to take a short position on it, as you can see, this operating income, you see a lot of losses, right? And operating income is the number one thing that I look at. So I looked at it and I saw that last year they lost $80 million. So you have a gym that, and not only did it lose money, it's losing more money as time goes on, right? And if I were to pull up the quarterly, let me do trailing 12 months. It's one of my favorite ones to use. So in this 12-month period, right, they lost $100 million, $100 million loss. And revenues were growing, but not growing that much. So if I were to do as a percentage of revenue, they lost 118% of revenue in that 12-month period. So I look at this and I'm like, okay, this is not an easy short, because there is no easy shorts. And betting against the stock, if I'm long, I can just hold it for 5 years. I don't care if it goes up or down. There's no time frame, there's no leverage. Like betting against the stock, there is either taking a short position where there's a margin call, or put options which expire. So shorts are actually much harder to do, and it implies a rational market. So there are some stocks that'll lose money for 5-10 years and they'll just keep going up. So that's why I'm very hesitant for shorts. So if I'm going to put a sell rating or a short rating, I mean, it's got to be the most obvious sell ever, right? So at first I'm like, okay, well, this is it's losing a lot of money, like a lot. So yes, they lost $100 million here. So I start really digging into the company because I really want to be sure. And I compare the business models to companies like Planet Fitness. And what I did not know is that F45 was a Mark Wahlberg gym. I did not know that. So quick look here. You have a $1 billion market cap, roughly the same price as the IPO, not too far off. And they did sales last year. So the price to sales ratio is about 9 or 10, which is, it's not bad, it's not good. It's I guess a reasonable valuation, right? So I started really, really looking into the company. And one thing that I know, because I go to gyms, is gyms like Planet Fitness, gyms like LA Fitness, or I'm not sure what you have in Italy, but like a big gym that's subscription based. It's pretty much the closest thing to passive income you could get. In fact, there was a study which I quoted here in the article that 67%, 2/3 of people with a gym membership don't even go. It's like free money for these gyms, yeah, right? And it's like the people like, oh, next I'm not going to cancel because next month I'm going to start going again. 2/3 of the people do that, right? So it's actually a gym is actually a great business model, right, in terms of wear and tear on your machines. So this gym, it's group classes and it's $200 a month. So right off the bat, there is not going to be 2/3 of people that pay you for nothing. If they're paying you $200 a month, they're going. That's number one, right? Second part of that is that who is your potential customer? For $10 a month, everybody is your potential customer. Whereas $200 a month, especially in an inflation environment like we have now, right? Like your customer pool is way, way smaller. These are people that, one, have the money to go, and two, they have the motivation to go, right? So that really, really, really narrows it down. So it really makes it like a specialty business, right? So I started looking at it, and I was looking for a reason to put a sell rating. And really, it's actually a pretty decent business model. Now, for me, as an offensive investor, right, I can't only look at what has worked. I also have to look at what can work. So what has worked is Planet Fitness. You charge your money, you have your building, and that's it, right? But if that's the only way you look at things, then the typewriter works until it doesn't because of computers, right? Or the shopping mall works until it doesn't because of Amazon. So I have to be willing to look at something new that's coming, right? So when you have a new business like this, I have to say, okay, is it possible that the entire workout landscape will change, right? Is it possible that people will completely change the way they exercise, right? So F45, it is a franchisor, just like McDonald's, although they do not purchase the land like McDonald's. McDonald's is the best franchise ever. They buy the building, they make you rent the building from them, then they make you buy the food from them, right? It's actually the most genius business model in the world. From what I can gather, that they don't buy the building, they only charge the franchise fee. And headquarters of F45 determines the workout for all of the franchises, right? And then there's a lot that can go with that, meaning currently the landscape for group gyms, for like yoga, for example, right? There's a lot of individual yoga studios opening up. There's not too many chains opening up, right? So just like there was a lot of, let's say, mom and pop restaurants, and then Olive Garden or Cheesecake Factory comes along. It's like there's no chains for group classes gyms. So that's one thing that I have to be open to. So in the article, I got this from transcripts, the CEO claims that it's the fastest growing franchise of all time, which according to the numbers, yes, and according to the number of franchises that open, it is one of the fastest growing of all time. So that made me hesitant to put a sell rating on it because, okay, well, even though they lost money that quarter, that year, that 12 months, it's still growing. So it's not the most obvious short, right? So I did not know that Mark Wahlberg was on it, right? Now, at first, this didn't matter to me, right? Because if you go to Macy's or if you go to Sephora, right, how many times do you see Paris Hilton on the cover of the makeup or Kim Kardashian on the cover of the eyeliner? They're not in the lab creating stuff, right? They're just a face, right? An endorsement. So at first I'm like, okay, yeah, Mark Wahlberg's gym, sure. But Mark Wahlberg actually does a lot of businesses. He does a lot of things, and he's actually a pretty successful entrepreneur. So one, because a celebrity like him is he's involved, publicity will be on this company's side. That's number one, right? So the question is, even though he is on it, will this actually be a legitimate business? Because at first I'm just like, oh yeah, sure, it's a celebrity gym, yeah, sure, right? But it actually is a pretty well-run business, right? So this is some of their recent numbers for the last year. So they're present in 65 countries. So now more than ever, you have to be aware of how fast things can go global, right? Like in 1950, I mean, you couldn't go from one country to 65 countries in a year, right? I mean, that was way harder. It's very different now. Now, that this time it's different is a bad thing to say. We really have to be aware of how things can really just explode now, right? But anyway, yeah. Total new franchises opened by quarter, right? And this is the equipment revenue growth, right? And it was sevenfold in 1 year, right? new franchises opened. That was their biggest quarter in Q2. So I wrote about the differences in the business model. Now, what makes significant differences in the business model? The person who checks you in at Planet Fitness, or what's your gym over there? What gym do you have in Italy? That's like the basic gym that everybody goes to. That's $10 a month, 10 euros a month.
Okay, no basic gym, but in the cities you have Virgin, for example, you have McFit and so on. So there are different gyms. There's no regular gym, depends if you live in a city or in the outskirts. But yeah, there are those kind of basic gyms where you pay your monthly subscription or yearly, depends. But yeah, it's more basic, like you say.
Okay.
No, unless you have a personal trainer.
Right. Okay. So I guess you get the general idea, right? You have
Yeah.
maybe the word basic is wrong, but you have a gym that has machines, right? So
Yeah.
the person that checks you in, they're not a certified personal trainer. They don't have a degree. They're just somebody that needs a job, like a minimum wage job, let's say.
Yeah.
And maybe you'll have like a manager, but that's really all your expenses and then the wear and tear on the machines. A group fitness gym, the person who runs the class, you have to have a personal trainer. You cannot not have that. Now that is a specialized profession. It takes time, it takes effort. You have to know what you're talking about. And then with a personal trainer, you have to have a personality to make people want to come, right? You have to have like a positive personality, like good job today, you know, that kind of thing, right? So
Yeah.
the entire employee structure is completely different, right? So that's the first thing I talked about. And then I talked about the 67%, which I mentioned before. And after the IPO, this is one thing I didn't like. They basically used the IPO to pay off debt, right? I mean, it's good. Paying off debt is always good. Nobody wants debt. But I would rather a company that has an IPO that didn't have any debt and is using all of that for expansion. That would be my preference, right? So in a way, this kind of says, all right, we're paying off our mistakes with your money. That's what it says to me, as like a basic, to the point investment mind, right? So the most recent quarter, they had 14.8 million net income. So they're not bleeding cash anymore. So they're growing and they're leveling off their losses, right? So then I talked about the three sources of revenue. From what I can gather, there is a one-time 50,000 startup fee, establishment fee, and they amortize it this word here. Okay, my tongue is twisted today. They amortize it. Fourth attempt. They amortize it over 10 years, right? So they get 5,000 a year from this, which is really per franchise is not that much money. So the second source is the equipment revenue, 125,000 per new franchise. From what I can gather, this is not, they don't manufacture it. They just slap their label on it. This way the whole gym can say F45 all over it, right? So really this is just a small markup. This is recognized all at once upon delivery in terms of accounting, like which quarter is it recognized in, right? And the other equipment revenue is just from wear and tear, right? So you have a machine for 5 years, it breaks. Or maybe they need to pay the F45 maintenance guy, let's say, right? So the third is the monthly franchise fee. This is the recurring revenue, right? This is the only recurring revenue. It's $2,500 a month or 7% of the monthly franchise revenue, whichever is greater, right? So the minimum per franchise is $2,500 a month. So they stated that their total goal, their wave the magic wand, if I could have anything in the world, this is what it would be goal, is I believe it was 23,000 gyms total, 3,300. Now they have 33, I was right, 23,000. I had this scrambled like that. So their goal is 23,000 gyms. So at some point, they will reach a ceiling for their new revenue, right? And their equipment revenue. So at some point, that 50,000 per and the 125,000 per is going to stop. Eventually, I mean, they can't grow forever, right? So really, as of today, the recurring revenue that I have to look at for their valuation is their monthly, right? So I pointed that out, that 2/3 of their revenue will one day stop, right?
Yeah.
Which that 2/3 accounts for 32% as of today of their revenue. So I just very simply I annualized their most recent revenue, right? I made it roughly 86 million a year.
Okay.
That is their franchise revenue annualized. So they made 21 million of franchise revenue for the quarter. So 1 quarter times 4, roughly 86 million, right? So if they were to go for their goal from 3,300 to 23,000, that is roughly 7 times what they have today. So if I were to 7x their 86 million, this puts their total recurring revenue at 588 million total, meaning that is the most recurring revenue this company can make as of today. So that sounds like a good goal, but it's also the total of what Planet Fitness makes today. Planet Fitness today, which was founded in 1980, 30 years ago, 1990, just hit 588 million, right? Or 534 million. It took 30 years to get that. So their revenue growth is there. I just compared the two. This is their revenue growth. This is Planet Fitness's revenue growth, right? And it's growing at a much faster rate. So it's a new concept. 2/3 of its revenue is one day not going to be there. And they haven't proven that they can make money over a long term. Right. So that's why I put like a hold on it. Like I'm not really willing to short it. I'm not really willing to buy it. I'll kind of keep an eye on it. And if I can see that they can consistently make money, I will. I mean, the ownership is there. Like they have a good insider ownership amount, right? And they have the publicity, and it's a new concept. And the stickiness of this business should be good. Like the people that go there, like, so if you have one central database, F45's database, you could rank your members. Like Giacomo is the #1 member for the month. He pushed the most amount of weight relative to last month, and then you could put it on the F45 central social media, whatever. Like it's possible to do, right? So that's why I put, the growth of explosive, but the caveats remain, right? And this is a lot. 290 new franchises in a quarter. I mean, that's a lot, right? So it's not my favorite stock, and I already started really looking into it. So I figured, okay, I'll just write about it and I'll do a hold writing, right? So Planet Fitness, this is what Planet Fitness has done with their business model over the last 5 years. They 5-bagged, which is not that bad. And it's actually a premium valuation, a forward PE of 56, right?
Yeah.
And they're a $8 billion cap. What's their price to sales ratio? Okay, so their price to sales ratio is 16 as opposed to around 9 for F45, but it's much more established, right?
Yeah.
So it's a different business. And let's see, this is, their F40, this is their cash to total liabilities wasn't that bad. Like it looked like they got their act together, but let's see, they had 42 million in cash. They had their total liabilities were, right? So that's a 0.6-ish, 0.6 ratio. So it's not that bad, but it's just not a natural recurring business. Like the personal trainers really need to sell and they really need to push. So let's say one franchise lost, half of its personal training. That would be very bad. Like that would be like devastating. Like the whole business implodes, right? So, there's no data on how long somebody stays. There's no data on retention rate. If one customer bought 3 years ago, are they still there? What percentage of them are still there? That data isn't there, right? So to me, they don't have the data. If they don't show the data, it's because they don't have it or it's not good, right? That's just me. Like otherwise, I'd brag about it, right? I would say, hey, 85% of our people stay. So if I'm not saying it, it's because it's not good.
Yeah.
My opinion. So that is why and this was very undercovered. I mean, I got barely any page views from it. It's really not a well-known business. Right? Yeah, look at this. That's how many people follow it on Seeking Alpha. So, which that shows me two things, right? Well, it shows me one thing for sure is that the market, Wall Street, they don't care if you have a celebrity endorsement. You know, it's really like show me the money, right? Because who's more famous than Mark Wahlberg? I mean, he's a famous guy, and they could care less, right? The forward PE, it's a decent, you know, valuation. So, but that assumes that it's going to stay profitable moving forward, which I don't know. It's not like they're just marking up the equipment, right? They're not like manufacturing the equipment. It's just, to me, it's just not for me. Okay, so this is one last thing, is because it's a franchise, they do have a good gross margin, right? Gross profit margin. So really their only expense, you see, this is what the expenses of each franchise is on the franchisee, right? It's not really on headquarters. It's not on F45 itself. They just kind of collect. So they do have a very, very high gross profit margin. In fact, let's say I did this. Let's say I did, I love Seeking Alpha, how you could just do all this Planet Fitness. So let's do a gross margin chart. Let's do it for 5 years, right? Look how much it's growing compared to, so this is another thing. It's like, okay, well, they're losing money. It's a new business model, you know, but it's showing promise here. Let's see if right, this is a percentage. Let's just do linear. Whether it's percentage or linear, the percentage one is how much the gross margin is growing. This is just their total gross margin percentage, right? So this is their IPO date, and it's dwarfing Planet Fitness, right? So the potential is there, which is why it's not a sell. You see, this is why at first I'm like, oh, we got a celebrity endorsed gym that's losing money. Well, it's a sell. And it's like, oh, well, not really. It's actually pretty interesting, right? It can, like, this is the type of thing where if you take a short on it, you really could get burned. So let's say I did net income margin. Well, now you see how different it is, right? Look at this year, right? So their net income margin is far, far worse. So what if I did a percentage growth? Yeah, doesn't look any better, right? So Planet Fitness is still pretty stable, right? So if I did total revenue, this is total revenue growth. Let's do 10 years, right? So Planet Fitness's total revenue kind of leveled off. F45's, this is their percentage of revenue growth, right? So as you can see, look at this chart over here. This is monstrous. Now, if I just did linear, now this, when I press this button, you're truly going to see the difference in size of these two companies, right? Watch how far above the blue is of the orange, right? This is market share, right? This is their total annual revenue. So as you can see, it's growing pretty nicely, Planet Fitness, right? This is the pandemic, obviously.
Yeah.
So it's not definite. Like when I write a bullish piece, it's like, I don't care if the stock gets cut in half tomorrow, I'll buy more. Like when I go bullish on something, you know, Warren Buffett says, if you buy a stock, buy it with the assumption that the stock market is going to be closed for 10 years, right? So with InMode, Digital Turbine, or Crocs, like I buy it with a 5-year window. And I don't know how F45 is going to do over the next couple of years, right? So that for me is why I put it on a hold. You know?
Okay. So yeah, I think you explained your concepts pretty clearly. So thank you for your contribution and for your insights that you collected. So thank you, Eric, for being with us today. And
thank you for having me.
So this is Hustle Hub. I'm Giacomo. See you next time. Bye.